very good evening to respected shareholders, directors, auditors, and others. It is indeed our pleasure to welcome all of you to the 54th Annual General Meeting of MPS Limited. Before our esteemed chairman delivers his formal address, allow me to highlight certain key points regarding participation in the AGM. The AGM has been convened through video conferencing or other audio-visual means in compliance with the provisions of Companies Act 2013, read with circulars issued by the MCA and SEBI from time to time. The participation in this AGM was opened 60 minutes prior to the scheduled time of commencement and will remain open for another 15 minutes after the conclusion of the AGM for casting votes. As stated in the notice, the company has engaged CDSL to provide BC facility, enabling the shareholders to attend the AGM with participation on a first-come, first-served basis for the first 1,000 shareholders. However, key speakers such as promoters, institutional investors, directors, KMP, and auditors will have unrestricted access to participate in the AGM. Since the AGM is being held through video conferencing, where physical attendance of members in any case has been dispensed with, a member entitled to attend and vote at the meeting will not be eligible to appoint proxies to attend the meeting. However, body corporates are entitled to appoint authorized representative to participate in the AGM and cast their vote through e-voting. The registered office of the company situated at Chennai shall be deemed to be the venue for this AGM, and the proceedings of the AGM shall also be deemed to be made thereat. Furthermore, to transact the businesses as mentioned in the notice, the shareholders are provided with an opportunity to inspect all documents referred to in the notice and explanatory statement until the date of AGM. In addition, we have received requests from 5 shareholders for enrollment as speaker shareholders in the meeting to express their views and ask questions. With this, I now request Chairman Sir to welcome and address shareholders. Thank you, and over to you, sir.
Thank you, Raman. Ladies and gentlemen, distinguished shareholders, esteemed directors, auditors, and all present at the meeting, a warm welcome to each of you at our 54th AGM of your company. I'm informed that the requisite quorum for this annual general meeting is present. I now call the meeting to order. Before we start the main proceedings, I would like to introduce the directors, senior management officials, statutory auditors, and secretarial auditors present through video conferencing and visible on your screens. Mr. Ajay Mankotia, an independent director and chairman of the audit committee, brings over 25 years of distinguished experience in the Indian Revenue Service, combined with more than a decade of experience in a prominent media company. He is an expert in taxation, accounting, law, and media. Mr. Mankotia joins us from New Delhi. Ms. Achal Khanna, an independent director of the company, brings over 30 years of leadership experience across diverse industries. With extensive expertise in human resources management, she advocates for women's empowerment and inclusive workplaces. She is joining us from Gurugram. Ms. Jayantika Dave, an independent director and chairperson of the Nomination and Remuneration Committee, brings 35 years of HR leadership experience. She has been the Vice President HR for Ingersoll Rand, Agilent Technologies, and Hewlett-Packard, focusing on executive coaching and HR strategy. She joins us from Uttarakhand. Mr. Karthik Bhatt, who has recently joined as an additional director of the company under the category of independent non-executive, is the founder and managing partner of Force Ventures, specializing in early-stage investments. With over 20 years of experience in both investment and business operations, he has advised, built, and invested in over 75 startups. He is attending from Bengaluru. Ms. Ravina Singh, who has also recently joined us as an additional director of the company under the category of independent non-executive, over 35 years of experience in leadership, development, and executive coaching. She joins us from Gurugram. Mr. Suhas Kullar, an independent director of the company, has over 20 years of experience in consumer tech startups, private equity, and consulting. He possesses expertise in finance, legal matters, resource allocation, investor relations, and compliance. He is attending from Abu Dhabi. Ms. Yamini Tandon, a non-executive director and chairperson of the Stakeholders Relationship Committee, brings valuable expertise in marketing, strategy, post-merger integration, and turnaround management. She joins us from Gurugram. Mr. Sunit Malhotra, CFO, and Mr. Raman Sapra, Company Secretary, both are participating in this meeting from Noida. Mr. Rohit Arora, partner, Ms. Walter Chandok and Company, statutory auditors, and Mr. R. Sridharan of R. Sridharan Associates, the secretarial auditor, and the scrutinizer are also attending the meeting from the respective locations. Thank you, and let us proceed with the agenda for this meeting. I will begin with some opening remarks. FY24 was an excellent year for executing a growth strategy toward Vision 2027. The final scorecard, which showed a total revenue and EPS growth of approximately 9.5%, did not do justice to what we achieved in FY24 and the phenomenal follow-through we expect in FY25. Our five-pronged approach, going gestalt toward growth, is simple in design. At its core, we relentlessly ensure that the whole of MPS is greater than some of its various parts. In FY24, our mission was to supercharge this proven strategy, and we did so with much success. We unlocked the market-based approach in the best way possible in the research business, where we place customer problems as a core focus and leveraged our capabilities as a toolkit to address the challenges. As a result, we saw a lift in revenue and profitability. Our emphasis on star accounts continued in FY24. We saw several strategic benefits, including improvement in quality of revenue, expansion in volumes, and a steady increase in the lines of business with star accounts. With respect to investment and launch of new capabilities, in FY24, we officially launched Think 365, a concept for Digicore, and acquired the Curie platform from Springer Nature. Each of these initiatives piqued much interest from our customer base and the marketplace in general, and several explorations are already underway. Additionally, MPS Labs made significant progress in enabling AI in our workflows. We expect a healthy portion of our organic growth story toward Vision 2027 to be attached directly or indirectly to this work stream. Our tailored growth strategies for corporate, education, and research markets allowed us to cross 750 customers in FY24. A focus on corporates that spent heavily on learning and development, a step up in partnerships with industry associations, and geographic expansion led the growth agenda in the corporate marketplace. In education, we unlocked synergies to deliver higher-end digital learning experiences and stepped up our efforts to move forward in the B2B value chain to work with universities and learning companies and edtech companies. Our price warriorship and product bundling allowed us to secure new logos in the research marketplace. We completed 2 acquisitions in FY24, our first in 1 year, per our new playbook. We completed the acquisition of Liberate Learning back in August 2023, which shaped our entry into Australia. Liberate was our second acquisition of a growing business, and the experience has been a refreshing change in our modus operandi. Since the acquisition, we've learned much about what it takes to operate and drive a corporate learning business, and these learnings will result in massive gains for the overall business as we march towards Vision 2027. In February early this year, we completed the acquisition of AJE. We have much confidence that AJE will significantly contribute to our Vision 2027 as we unlock its strategic levers, including moving more upstream in the value chain, closer to the funders, and working directly with authors, entering new markets, including China, Brazil, and South Korea, and scaling up our partnership with Springer Nature, who are one of our more premier star accounts in terms of scale, but also in terms of potential. To wrap up FY24, all businesses and lines of business are developing a growth momentum. The positive developments in operating cash flow allowed our board to recommend a generous distribution even in a year when we completed 2 acquisitions through internal accruals. Looking into FY25, we will build on the success achieved with a market-based approach in our research business and apply those lessons to the education and corporate marketplace. Our goal is to increase our star accounts to 100 by the end of FY25, which will bring significant progress in terms of our organic growth and margins. We anticipate seeing returns from our investments in new capabilities in 22 and 23. Additionally, we plan to launch an enhanced version of Digicore Pro, AI-powered solutions for accessibility and translation, and a SaaS platform for immersive learning. We remain committed to our updated acquisition strategy and will continue to prudently allocate capital that would further our growth agenda in FY25 beyond what you see today. FY25 will be an inflection year. By the end of FY25, we aspire to reach the halfway mark on Vision 2027. In conclusion, as the Chairman and CEO of MPS, I'm honored and privileged to lead a team that shares my vision and drive. Together, we will continue to forge ahead, pioneering innovations that make learning smarter and accessible to all. With your support and trust, we are poised to build a legacy that democratizes learning around the world. As we reflect on another year of substantial growth, I express my heartfelt gratitude to all our stakeholders for their continued support and respect. We look forward to your ongoing partnership, feedback, and collaboration. The notice convening this annual general meeting, along with a copy of the annual report for the financial year ended 31st March 2024, has already been circulated to the members of the company. Therefore, kindly take the same as read. The Board of Directors of the company, in the meeting held on 21st May 2024, recommend to declare the final dividend of INR 45 per equity share of the face value of INR 10 each for the financial year 2023-24, in addition to the interim dividend of INR 30 per equity share of INR 10, each already paid during the year to the shareholders. The Secretarial Auditor's Report and the Statutory Auditor's Report on the financial statements, standalone and consolidated, of the company for the financial year ended 31st March 2024 does not contain any qualifications, observations, or comments on financial transactions or matters that could adversely affect the functioning of the company. Accordingly, there is no requirement to read out the auditor's report during this meeting as provided in the Companies Act 2013. Therefore, kindly take the same as read. Thank you, and over to you, Raman.
Thank you, Chairman, sir. We will now begin with the question and answer session with the shareholders who have registered with the company as a speaker shareholder. In the interest of time and to give opportunity to other shareholders, we request speaker shareholders to please be brief and concise while expressing their views and limit their queries, questions, and suggestions to maximum of 3 questions, and share rest of their questions in case if there are any by writing to us at investors@mpslimited.com, and we shall reply to the same promptly. The speaker shareholder will be unmuted by the host. To start speaking, the shareholder is requested to click the video on the button enabled by the moderator for you. If a shareholder cannot join through video for any reason, the shareholder can join through audio mode. Once all speaker shareholders raise their queries and comments, I request Chairman sir to kindly answer or to direct the concern to answer the same. We take first question from Shri Ramesh S. Damani ji. Sir, kindly go ahead, please.
Just 1 minute, please. Hi. I first want to congratulate Rahul Arora and the board for an exceptional set of numbers and the leadership that they have shown in this company. Particularly, I want to congratulate the board and the management team for the payout ratio that they paid. They paid 75 rupees dividend, which is extraordinary. I follow companies for a living, and to have that kind of confidence to pay more than 100% of your earnings as payout is truly remarkable in corporate annals. And I'd really like to commend the board and the MD for doing that. I think it sends a message of confidence in yourselves, confidence in the future, and we are very grateful as shareholders for your contribution in that. So thank you very much to the board for that. Mr. Arora spoke in his speech about integrating AJE, the acquisition in China. I was just wondering you would share some color into that, given that he said FY25 is shaping up to be a benchmark year halfway through your strategy. Could you give us a progress report in what kind of turnover we would expect from the AJE acquisition, and how is the outlook for this year and the next year? I would appreciate that. And again, I'd like to conclude by thanking for an excellent set of numbers and stewarding this company so well over the last few years. Thank you, guys.
Thank you, sir, for all your kind words and encouragement. Yes, it's been quite the journey, and always been good to have support from shareholders like yourself that gives us the confidence to do what we need to do. With respect to AJE, I think there are various aspects that make the acquisition kind of an inflection point for the company. Firstly, as you pointed out, China as a market is important for us. As we look to build global scale, it's increasingly becoming important for us to get into not just new geographies, but to also be able to support our customers in global agreements. It's not uncommon for customers to decide upon vendor partners that actually operate in multiple geographies and can support them in geographies such as China, where typically you would have to partner with someone that's not on your preferred vendor strategy because of the uniqueness of the market. So having a foothold in the market is a very unique differentiator for us. There are not too many competitors in our space with that position. So we are using that as a compelling differentiator to increase the B2B side of the AGE business. The second piece of the AGE acquisition, of course, is that we are now finally getting closest to the most important stakeholder in the research value chain, which is the funder who funds the research. Previously, we were working directly with the publisher. On behalf of the publisher, we were working with the authors. And yes, today we are working more directly with the authors, but indirectly, we're actually working with the funders who are funding the research as we engage with the authors, because they are really funding the author to engage with us. So it's more B2B2C. So strategically, again, being closer to the ultimate stakeholder also allows us to then climb in a more strategic spot in the value chain, possibly de-link a couple of links in the chain as well. The third piece, which makes it also interesting, is the association with Springer Nature. Springer Nature today has almost $100 million spend in the type of work that we do. Of that spend, our share of wallet today is less than 10%. So we are seeing a massive upside potential as they right-size their supply chain and consolidate their supply chain. And we already started to see effects of that within the first 3-4 months as our business with them is rapidly expanding. The fourth piece of this is, of course, the AI capabilities that we get through AJE, both for the Curie platform, which is an AI enabled writing assistant, as well as the Lewis platform, which is an LLM that they have created, which allows us then to not just unlock value through the AJE customer base, but use all of that IP toward our customer base as well. And finally, in terms of the progress, yes, what was given to us was a loss-making asset. We have successfully turned that loss-making asset around. Revenues are stable. Previously, MPS has been a acquirer of loss-making assets, and typically what happens is that we reduce costs and the revenue drops. I'm happy to report that has not happened in the case of AJE. So we expect a similar run rate that they have achieved in previous years, north of $20 million in revenue. With respect to margins, we will start Q1 soft because we've acquired a loss-making asset, but we will basically end by the end of Q4. We will be in a very good position because half of I'm now ballparking here. I'm not giving you exact numbers. Half of AJE is a content business, half of AJE is a platform business. So we will look to bring the AJE margins similar to our content business and platform business. So overall, unlike some of the acquisitions that we've done on the corporate side, which have diluted our margins, AJE will actually be margin accretive and will help improve the margin. So the lot of strategic elements here. Financially, I think we've done well in terms of what we paid for this asset. We're expecting strong ROC numbers for the next 3 years, as well as to add to that strong organic growth as we unlock the B2B element. That's the piece that where MPS adds value. AG historically has worked mostly with authors. They call it B2C, but actually it's B2B2C because the funders are paying for the service or the platform. And what we bring now is bringing a suite of customers on the B2B side that we are unlocking for AJE. And again, we're already starting to see, even in 3-4 months, we are seeing more revenue, more customers, and so on.
That's excellent. Thank you so much, Rahul. You're doing a great job, and my congratulations to you.
Thank you so much, sir. Thank you.
Thank you, Damani sir. The next question is from Mr. Mukul Mahavir Agarwal sir. Sir, kindly go ahead, please. Mukul sir?
Yes, sir, he is talking.
Yeah.
Hi, am I audible?
Yes, sir.
Yeah. So first of all, congratulations, Rahul and your team for uh, continuously reporting very good number, and above all, excellent corporate governance. And I should congratulate you on your uh, dividend and buyback policies. I've been shareholder since last 8-9 years, and more than 70% of my cost price has been returned by the company in way of dividend and cost price, which is amazing, and never seen such good payout by any company in India. Congratulations, and I request you guys to continue doing this. This is the best thing which investor wants. Yeah. My question would be, our stated guidance is, Vision 2027. We talk about 1,500 crore top line. And our FY24 exit EBITDA margin was 31.5% with a ROC of 36%. So are we talking like, if we maintain similar EBITDA margins, say between 30 and 35%, and we achieve 1,500 crore top line, so we are talking about 475 to 500 crore EBITDA with a ROCE of probably 40% and more, right? And we are currently, the market cap is 3,400 crore. So is my math correct? I'm not asking for guidance, but this is the vision of the company which officially you have given. So is my math correct, or I'm missing something?
So again, sir, thank you for all your kind words and kind encouragement. Again, wouldn't be MPS would not be here without support like this, because yes, we are doing well now, but in the 8-9 years, we've also seen some downs and not just only up. So again, thank you for being a supporter through those downs as well. So yes, except market cap, which is not under it's something that we can control. All your math is correct. We are looking to get to Vision 2027, which is north of 1,500 crores in revenue at similar margins. So your math is absolutely correct on the revenue and margins. FY25, as I've also mentioned in the opening remarks and the annual report, is an inflection year, because what the management team and I are really, bending our backs towards is to make sure that this is the year where we cross the halfway mark, so that there's more conviction internally as well as externally that this is actually headed in the right direction. So this is our year where we say let's hit the 50% milestone. And again, your math on the ROCE on all the metrics around finance are absolutely correct. And the market cap, the market will do what it'll have to do. We will work on the results.
Thank you, sir. So the next question is from Mr. Naveen Bothra. Please go ahead.
Yeah, very warm wishes and greetings to our CMD, Mr. Rahul, and distinguished board members and management team of MPS Limited. I am Naveen Bothra, attending this 54th AGM from Delhi. It's a very proud moment for me as shareholder. Before me, Mr. Ramesh Damani and Mukul Agrawalji, market veterans also speak. So it's a very proud to be shareholder in MPS Limited. First of all, I would like to congratulate team MPS under your dynamic leadership and dynamic and agile leadership for great set of operating performance and distributing more than 100% of our earnings through dividends, and the inorganic initiatives we have taken during the year, which we fully support. Sir, I would like to also thank the finance team headed by Mr. Sunit Malhotra, and secretarial team led by Mr. Raman Sapra for the excellent information annual report, which I really relished reading, and sending me all the documents and smooth onboarding in this meeting. Thanks, Raman and his team. Sir, I have the following point for your kind consideration. First point I would like to speak, since you, in your initial chairman's remark, you spoke about the vision 27, 28, whatever we call it. So I would like to skip it. Coming to the point number 2, our theme of this year's annual report is scaling global, sir. The scaling global with trust on AI. Rahulji would like to have your views on Gen AI and the use of same in our lines of business and the impact it will have on the people cost as well as our revenues and how these are currently panning out. If you can enlighten, it will be quite good, sir. Number 2, regarding the MPS labs. We have spoken about in the annual report. We have spoken about a lot about the MPS labs, but would like to have your views on the work stream for the all the benefit of the shareholders, that how it is helping us in the current lines of businesses. Number 1, to generate new ideas, new services, and are we doing any new R&D out of our current lines of businesses after the acquisitions of AJ, and as you talked about AI capabilities and Curie and all these things. So how the MPS labs portion of business is doing, and also if you can share about your views that if any line of our current business as well as MPS labs or Maginu can become a separate vertical in the future, please enlighten. So I have already voted in favor of all the resolutions, and I hereby propose a vote of thanks to the esteemed board. Also, Rahulji, I would request you, I will be touching with Mr. Raman and Sunit. Whenever you are next in Delhi, we would like to meet you as per your convenience. And thank you very much for the opportunity. I wish team MPS all the very best. Thank you, sir.
Thank you, Mr. Botra. Absolutely. Again, thank you for your support, and would love to, meet with you in person as well. I think to look at your questions. So first on AI, I think I've spoken very openly about this previously as well. I think I see this more as short term and medium term. Short term, I think what we are seeing is experimentation, exploration, and live projects as well. All of our explorations are sponsored explorations. So we of course doing our own R&D. Having said that, when we do engage in an exploration with the customer, is typically a paid service. So more short term, we are seeing an increase in service type of revenue, where we are basically trying to figure out how, in collaboration with the customer, how AI embedded in the workflow can fast track the cycle time, but also improve the customer experience, because most of our customers has slowly becoming themselves subscription businesses, and when they started the journey, their focus was more on cycle time, and now slowly as they're getting more mature in managing the businesses, it's more about customer experience. So yes, so short term, we've seen a spurt of revenue in around translations, accessibility, using AI to produce content where subject matter experts are not available, and then we're using AI to actually mirror what a subject matter expert would produce. So lots of different use cases, and it's interesting project-based work that we are unlocking revenue and value from. The second piece which is more exciting, is as we are going down this path, we're realizing that it is not something that our customer can achieve without us, or something that we can achieve without our partnership with our customers. So it's in this whole world of an AI-enabled workflow, an AI-enabled collaboration, you need deep collaboration, because you're trying to basically build configured models. You're trying to do a lot of things that to protect IP and to protect content. You're making sure that you're creating closed libraries. So there's a lot of back and forth and iteration and close collaboration. As a result, what we expect as a final kind of move here on the other side of this is supply chain consolidation, where customers will basically pick one, at the most two suppliers that they will engage with to build out a new world of AI enabled content solutions work, AI enabled learning work, as well as platforms that allow them to do it themselves as an offering. And that's the piece where we see our star account strategy helping. As we start to build strategic partnerships with over 100 customers by the end of this year, where through that emphasis we end up building some very deep collaborations and start to really accelerate growth with those customers. The flip side, of course, of that is there will be customers where we are very transactional, very tactical. We don't have those deep relationships, and they then in turn will choose to possibly work with other partners who they are more strategic with. Having said that, feeling very confident based on what we are seeing and hearing in the marketplace in terms of the MPS capabilities. Very recently, with a government agency, a state government agency in the US, we have been evaluated for our AI capabilities as part of an open tender. All providers were given a ranking on a scale of 1 to 100. I'm pleased to report that out of the 15 companies that were invited to this tender, MPS is one of the 5 companies that have gone to the next round, including the companies that have been excluded. Many of them are known, and of course, we don't want to name them, but many of them are known names compared to ours that are much bigger than us in size. So the first, that's a good first check we've got. In terms of MPS Labs is a combination of 3 things for us. It's an incubator of new products where we basically launched 3 new capabilities every year. So that's the R&D wing where our new products are conceived. Second, it is a reviver of old products. As an acquirer of many assets, we also acquired technical debt. So you basically would have technology that would go in there and would be revived with a modern tech stack, totally looking at a different viewpoint. So if something is built with monolithic architecture, how do we replace it with microservices and a modular architecture? And then finally, investing in making sure that the work that we are doing is being done efficiently. So it's more of a cost center rather than a profit center, but we are seeing significant gains from having this setup. We are one of the handful of companies that have invested in this unique way. I think that's one thing that is different about us than some of our competition, that we don't have a very large sales and marketing team. Our organic investments tend to go more into things like MPS Labs, and then through the inorganic route we acquire new logos, and initiatives like MPS Labs allow us to build things out with our captive customer base. So in terms of what is MPS Labs up to, like I shared, Digico Pro is a product that has been launched by MPS Labs. Think 365 is an old product that got revived under MPS Labs, and now the Curie platform, which is an AI-enabled writing assistant, has also been brought into the fold of MPS Labs, because we feel we can do more with Curie than simply writing. Because the problem of a researcher is less about writing, and more about getting published, and that's the problem that we're trying to solve now with Curie. So I hope that answers your question.
Thank you, sir. The next question is from Mr. Keshav Garg. Please go ahead.
So thank you very much for this opportunity. So I will keep my questions for the con call. So right now, since the board members are here, I have a very small suggestion that after the recent budget, after 1st of October, share buybacks is practically have been made impossible to do. So this is a small window period from now till 1st October that the company can do a share buyback and distribute whatever surplus distributable funds that the company has to the shareholders at minimum taxation, which is 23% in the case of buyback. Because post October, the maximum marginal rate of 39% will apply. So this is a small suggestion for the consideration of the board, because this company has really uh, has a great track record for creating shareholder wealth. So if the board can capitalize on this opportunity short window period, then the shareholders can really benefit. So thank you very much and best of luck to you and your team. Thank you very much.
Thank you, Mr. Garg. Thank you for your question as well. Yeah, we'll absolutely discuss your input at the board. As you'll note that we just distributed a fairly large corpus of distribution recently, so we will have to evaluate what surplus is available. So we'll absolutely discuss that and appreciate your feedback. Thank you so much.
Thank you, sir. The last question is from Mr. V. Ramasamy. Please go ahead.
Good evening to all. I am Vasudeva Ramaswamy speaking from Delhi, sir. First of all, congratulations to the team on the good set of numbers and the payouts from time to time. I have got a few points for your consideration, Mr. Chairman. Firstly, de-risking. Our efforts to de-risk the business by increasing our footprint in Europe and rest of the world and offering more products are highly appreciated. Sir, our geographical dependence and is mainly based on US, which is more than 50%. As well, our dependence on content business is also same from 50 to 55%. Kindly enlighten us as to how we are planning to reach the business concentration and geographical concentration. Your considered views will be highly appreciated, sir, which will benefit all the long-term shareholders who include veterans of the market. Point number 2, sir, Majinu the design studio. We have this Majinu division under our learning vertical. I have two questions. If you can throw some light on current revenue from this Majinu will be of help. Further, what is our organic investment for this vertical to scale up further? Where do we see this vertical in the coming 3 years' time? Kindly enlighten. Restructuring, reorganization. Mr. Rahul, we have been talking about becoming 1,500 crores top line company by 2027-28. See, do we have any thoughts of restructuring, reorganization like demerger of some vertical for further value unlocking? Please help us understand. Thanks for the opportunity. All the best to the team. Again, I wish the team MPS great success in the years to come. A long way to go, and we have got a marathon to run.
Thank you, Mr. Ramasamy, for all your kind words and also support and encouragement. Yes, I think I might answer your question in the reverse order. Our business, the way we look at it today is, yes, we look at our business from a capability standpoint, so content, e-learning and platforms. But if you look at it from a market standpoint, we serve 3 primary markets: research, education, and corporate learning. And essentially, when you look at these 3 markets, while there is some overlap, it's minimal. So in some ways, we are a combination of 3 different companies. Having said that, we are not at a scale to consider something in terms of restructuring, demerging, and those kind of things as of today. Today, 60% of our business comes from research. About 10% comes from corporates and the balance from education. I think for us to look at something like this, this will be something that we look at possibly in 2028, once the business has built scale and each of these subcomponents then are seriously big enough to actually have a future independently. And of course, that will also be subject to what the markets, how the markets are behaving as a whole. Do we end up unlocking some synergies across these three markets that we're not imagining today? And finally, in terms of growth in each of these three markets, are the growth, both the growth potential and our growth track record similar or dissimilar? Because of course, if it's dissimilar, then there's a very strong case to do what you're recommending. But I think that will be a discussion possibly a few years from now. And once we build scales and each of these subcomponents are of a certain stature. With respect to the Magenu business, I think of it as a very attractive business to differentiate ourselves from our competition. We tend to do 1 to 3 projects per year. We could have 1, we could have 2, we could have 3, and every year is different. I don't see this as a business that is directly scalable. But I do see it as a business that indirectly helps build scale in the learning business. So what are we doing in the Magenu space? We're essentially building, corporate museums, brand experiences, marketing stories for large corporates. These tend to be opportunistic. A large PSU in search of a new image because there's a divestment coming up. Someone trying to celebrate a 50th year or 100th year. Those type of things on the corporate side. So really, we think of this less about scale and more about playing around and experimenting with new technologies, with new ways of helping engage with the end learner, and using all the experiences and takeaways and bringing them into the core of our business, as well as differentiating ourselves from the highly competitive e-learning market. So I don't think of Magenu as a scalable business. I think of it more as a tool, as a marketing tool to differentiate ourselves from the competition. In terms of how do we to look at ourselves, going back to your question around reorganization, I know your question was more around the corporates structure side, but also in terms of organization structure, which is more relevant for us today. We've been actively investing in the three levels of management, the top 3 levels of management that we call the executive leadership team, the senior management team, and the general management team. And as a result, we've been able to do a lot of these acquisitions and actually acquire and operate. So, for example, with AJE, the reason we were able to quickly bring some of the costs down, take over the business, and actually start to grow it was because we had management bandwidth in the US as well as in India. In the US, more on the operation side, in India on the engineering side, that allowed us to quickly take over. So those kinds of reorganizations and team structures will continue as we scale up. In terms of vision 2027, 2028, as you pointed out, there will of course be some years where we will grow faster than the average CAGR, and some years that will go slower than the average CAGR. And FY25 is hopefully, fingers crossed, a year that where we will be above the average.
Thank you very much. I now request Chairman Sir to kindly give closing comments.
Thank you, Raman. Thank you all for your active participation at the 54th AGM of your company. We appreciate all your thoughtful questions. Your unique outside-in perspective helps us to learn and improve. I want to take this opportunity to express my gratitude to all our stakeholders for their continued support and respect. Our journey together has been remarkable, and we have a tremendous opportunity to supercharge scale. I look forward to your continued support, feedback, and partnership mindset. Once again, thank you. Over to you, Raman.
Thank you, sir. Pursuant to the provisions of Companies Act 2013 and SEBI listing regulations, the company has provided a remote e-voting facility to all its members to cast their vote on all resolutions set out in the notice of AGM from Monday, 5th August 24, which ends on Wednesday, 7th August 24. The company has provided the remote e-voting facility to those who were members on Thursday, 1st August 24, being the cutoff date to vote on all 3 resolutions set out in notice of AGM. Members attending the AGM today and who have not cast their vote by remote e-voting may cast their vote on the e-voting platform today. Now, I formally propose to the members participating through VC to vote on all the resolutions set out in the notice. The e-voting facility is now activated for next 15 minutes to enable members to cast their vote. Once the member have cast their vote on the resolutions, members shall not be allowed to change it subsequently. Mr. R. Sridharan of Messrs. R. Sridharan Associates Company Secretaries were appointed as a scrutinizer to scrutinize both the remote e-voting and the e-voting at this AGM in a fair and transparent manner. The result will be declared within 2 working days from the conclusion of this AGM. The result, along with the scrutinizer report, shall also be submitted to the stock exchanges and simultaneously be also placed on the website of the company as well as CDSL. Thank you once again to all of you for joining the meeting. I now propose a formal vote of thanks to the chairman and all other panelists, and I hereby declare the proceedings as closed. Thank you, everyone.
Thank you.